Now, on top of that, you have this added geopolitical uncertainty layer. How do you sort of sum up just the sentiment and how we are looking at the earnings season kicking off now?
Yeah, good morning, Sylvie, and good morning to all the viewers. Obviously, yesterday was a big blow to the sentiments. Like after last 20 odd days, there has been a very comforting market sentiment which is prevailing. And we saw even the FIs has been participating in India with almost 14, 15,000 crore of buying in the last 2 weeks or so. So sentiments were coming back to senses and we were all getting ready for the quarterly season. And then we had this deja vu, which we had earlier in the month of Feb and March. Having said that, we will have to see how this will play out because this is pretty crucial for India. But I want to leave one thought with the investor community is that, there is something called diminishing marginal utility. There's an economic concept. And I believe that is very much relevant in the market also. So obviously we are seeing that whole language and that actions happening around US and Iran coming back, deal is out of the window. Possibly the risk of sentiment is prevailing across asset classes, but we don't believe that it will have a very cascading impact that what we witnessed last time. So we believe that this will be more of a kind of an negotiation tactics which US is implementing to make sure that they get out of it with an upper hand. And somehow we also believe that in spite of this second day of attack by US in the morning, when you came to know the reaction on your crude as well as on the other asset classes is not very severe. So, keeping finger crossed, I believe we will have to go through it. This war was supposed to have these events to play out. This was well expected, but then market went into the comfort zone and we got a knockoff yesterday. So that's how we believe. We don't think we are not riding too much negativity into this, but we will remain cautious about it.
Okay, fair enough. Chandan, before I start off with today's stocks in focus, etc., I just want to understand that now that we have this new spin to the market, till now the market was trading X of crude, and those things had stopped mattering. We were not bothering about it. But now that there is this added, issue again, broadly in terms of near-term trading, are you changing anything? I mean, the way you were looking at, say, banks and financials, the way you were looking at, whichever other stocks, whether it's power, basically the pockets which were showing momentum, is there anything that you will alter or change compared to, say, where you were 2 days back?
Yeah, so due to sudden spurt in the India VIX and decline in the broader market and concern over the geopolitical issues, we will go with slightly safer name or will suggest to reduce the trading activities in the market. If you ask me, few sector, however, in last couple of days, Nifty Realty has seen a strong up move, but these are most of the high beta names, so we need to be cautious here or either book the profit as after the high tops, high bottom of last couple of days, some range bound stuck or profit booking could be there. I'll focus on the Nifty Defense Index with the view that rising geopolitical tension might attract the buying interest here. And on daily and the weekly chart, Nifty Defense Index has given a breakout and retested the same. I can focus on the Nifty Pharma as well because this is the one sector which is performing well. However, on the last trading season, it witnessed a decline. But selective pharma name and few healthcare stocks are likely to be in focus. So counter like Zydus or Apollo Hospital or Lotus Lab could be bought. So pharma may be one space where I'll go for buying interest, while talking about BFSI, Auto, another name has to be wait and watch mode to get the stability over there.
Okay, so lighten some positions in some of the other active parts of the market. And you'll go with some pharma names. You mentioned Zydus is one. And you said defense. So Chandan, give us some names as well there. Again, these are all near-term trades that I'm talking about. So specific stocks in pharma and defense?
So defense will go for buy on decline on HAL. Data patterns could be one name which has seen a corrective move in last 3 weeks, may find support nearest 50 DMA. Can look at the BDL, however, it got stuck in a range, corrected by 4-5% on the last day. But any decline towards 1260, 1280 could be bought. So these are the couple of names which can be bought on decline with the view that entire pharma defense index can see the buying interest from lower levels.
Okay. All right. Got it. Now it's time to get started with our stocks and news today. Not a very long list, but a couple of names worth calling out here. So I'll begin with Tata Steel. The company's come out with its production update, and production in India is up 11.3%. That's year on year at 5.82 metric tons. The India delivery volumes are up just under 9%, 8.84%. So those are some numbers from Tata Steel. Then there is JSW Energy. It has commissioned 1,000 megawatts renewable power capacity since April 2026. 1,081 megawatts has been commissioned since the start of this year. And the operational capacity of the company has now reached 14,535 megawatts. This was the update coming in from JSW. Phoenix Mills also gave its Q1 update. Retail portfolio is up 32%. The commercial offices gross leasing is now at about 1.9 lakh square feet. And their iconic property here in Mumbai, St. Regis, it delivered a RevPAR growth of 15% year on year in Q1. So those are some numbers coming in from Phoenix Mills. Of course, like I said, the big SBI IPO, SBI Mutual Fund IPO is coming through. So we'll keep an eye out on, of course, the entire space, the AMC space, as well as State Bank of India. SBI itself is selling a little over 6% in this issue. So it will be, of course, raising some money. And then, of course, we'll watch out for, again, like I said, the valuation is a little on the lower side compared to the big listed, peer AMCs like ICICI Pru, as well as HDFC Mutual Fund. So we'll see how the stocks react to all of this. These are some of the names on the radar. Aishwarya, I want to take up the last piece first. What do you think of the SBI Mutual Fund IPO? And, are you a buyer in any of the AMC stocks?
Yeah, so there are two things to it. Obviously, this is one of the bigger one with almost 15% market share. What really excites us in this space is the way these players have that high operating leverage. Even if you speak about SBI funds, and if you remember in FY 2023, they were at almost 200, 300 crore of profits. Now they're sitting at more than 3,000 crore of profit in the last 3 years. And their book, because of that SBI excess, is one of the largest in your SIP. And they almost have 2.5% kind of name itself in the equity side. So everything sticks well from that perspective. But if you really look at the whole sector and connect it on valuations, like at roughly around 1,17,000, 1,18,000 crore of valuation for a 3,000 crore of profits, they are roughly around 38 times PE trailing. And if we compare it to historical growth in the future, they would be close to 30 times forward PE. And if we compare it to other, AMC players, we have ICICI and others where you have that, valuations slightly on a higher side. So we believe SBI will find its interest by the investor community because of the higher growth and because of the higher market share gain. There's possibility that because of its high ROE also, they will be able to command a higher premium. But I think it's, I would say, long-term thought-driven IPO investment rather than anything happening in short term is my point of view. Second point is if you really connect the dots here with SBI funds and Jio announced their IPO, we have NSC, the much awaited, and then PhonePe and many others coming down the line. So we have to assess how all of this will impact the liquidity and its impact on the market in the coming months, especially when we have again that West Asia crisis going through. So overall, selectively, we would believe that this is a good one, but investors has to think slightly longer term before investing here.